Hey guys, Matt here, and I wanted to go over my recent trade on LCI and pretty much why I picked the stock and what my plans were and what happens when your plans go against you. So let's get started. So why did I pick this stock? This stock announced earnings close to November 7th, and then the next day, stock had like a 30-40% move on the daily chart. But I didn't trade it in here because I'm more of a swing bias trader. I want to, do a more swing trade approach versus day trading. I did try day trading for about 2 months. The stocks just move way too fast for me. And, since I'm also at work, I don't have enough time to actually be viewing the charts and working. So, with swing trading, it's kind of a little bit better because, again, these stocks move a little bit slower, and technically I do end up having better plans on these than day trading. But anyways, why did I trade this? So again, the stock had a huge move, 30-40% move here, but I didn't catch my eye. I mean, I had it on my watch list, on this day, and I was waiting for at least a pullback, which it did. But what really caught my eye were these 4 green days right here. Now, I didn't trade it in here because that would be chasing a stock, and I have a really bad history of chasing stocks in the past, which led to me losing a lot of money because of that. So what I focus now on is kind of finding bottoming action, and in this situation, on this red day, that's when it came from 648, 650ish, back down to about 560. So that's when it really caught my eye here, because as you could see here, if we draw a line right here, this low is actually higher than this low, which again I really look for. And then if we draw an overall pattern, ignore these 2 red days, this is what I was actually looking for. So stock spiked up, came back down here, spiked back up. Even though this was red, it still reached highs as 619, 620, came back down here to 508, which was relatively, I mean, you could technically say it was higher than this low here. And then the reason why I traded it was because this low actually was higher than this low. So this green day is actually when I traded it. And if we go to the 1-hour chart, next day after this kind of drop in price action, it had a couple of green candlesticks here, and again, I didn't want to chase up here because again, I don't want to have that guilt of buying up here and then, hey look, the stock crashes and then I have to cut my losses here quickly. So my plan was to buy the stock when it actually bottoms out, and then I could risk off previous support, which is right here. But then as you could see, the stock next day kind of went against me. I would have cut losses here quickly, but again, I was at work and couldn't view the chart. But as the day went on, it looked like it was bottoming here after market, and this was actually Friday after Thanksgiving, so the market actually closed a little bit earlier. And then the next day today actually, on Monday, stock actually was moving pre-market, so that kind of gave me confidence that the stock could reach its highs. If we go back on the daily chart here, I was hoping that this could actually go higher after this red day, but that's not the case. As you can see here, stock opened green and then just faded. And if we go to the 5-minute chart here, this is where I actually I was actually viewing the stock here, and then it actually crashed. And I actually set alerts, that way I don't look at the stocks while they're happening, because again, I'm busy at work, so I don't want to get in trouble or anything. But I set an alert at, what was it, 570 here on my TD Ameritrade account, and then once I hit that alert, that's when I look at my phone and I'm like, okay, the stock is crashing. So going back to my previous support here was at 565. So I wanted to kind of sell here. And that's another reason why I kind of set my alerts, a little bit higher than the support, because, in case that alert gets set, like let's say 570 and my risk level is at 565, kind of gives me 5 cents of wiggle room to work with, just to get out of the trade on time. By the time I open up my phone, log in, actually hit that sell button, the stock could be, going lower. And in this case, it did. And I was actually trading the stock on my interactive brokers, and I don't really like that app because for me it's complicated. I like something simple. I might even go back to my Robinhood account, which, by the way, guys, if you want a free stock, just click the link down below. Sign up for Robinhood, you'll get a free stock. And basically, Robinhood was a little bit more easier, even though a lot of people don't really like it. I mean, I like it as a for more swing trading. For day trading, I didn't like it too much because the stocks move fast, and I heard stories that executions aren't that great. But if you're trading slower moving stocks, I mean, Robinhood, I don't see a problem with it just yet. So, but why did I sell here? Again, I panicked. I actually put in a market order on my interactive brokers. I didn't want to risk the stock, going even more lower than it already was. So I just wanted to protect myself. And also, again, that support level that I was eyeing, it broke it. So I'm like, okay, this stock can go even more lower. I need to get out. It's not doing what I wanted to do, so I'm out. But then after I sold it, stock went up. So it was a little bit of regret there, but I don't really care at this point. I stuck to my plan, and that's all I care about. I mean, I didn't know that the stock could have gone higher. My expectation was that it was going to go lower, and in this case it did. Or I'm sorry, it did, but after I hit a highs of 590. So I mean, judging on the daily chart, going back here, the stock could go way lower or higher. I mean, these stocks are unpredictable. That's why you always want to have a plan and stick to that plan. If the plan goes against you, get out, because you just don't want to risk your hard-earned money. And that's how I pretty much trade on, is always go on with a plan, never trade random stocks. And you pretty much just have to cut losses quickly. And in this case, I did. I bought, let's go back to the 1 hour chart here. So I bought 150 shares, again, risking off that support level here. So I was risking about $40 here, to make, again, 2-to-1 risk reward. And why did I pick the 650? Well, if we go to the daily chart, again, I know it's a lot of back and forth, but when the stock actually crashed here back in mid-August, it kind of created I guess you could say a new high, a new resistance level. And the stock wouldn't break it, but then it wasn't up here where the stock actually tried to break it but couldn't, and then the stock crashed. So my plan again was to buy it and kind of sell it towards this resistance level or even higher if the stock had enough momentum. But as you can see in this situation, it didn't, so I ended up cutting losses quickly. Alright, but I think I'm going to end it here, guys. Again, I always go into the mindset, if a trade goes against me, I get out, just so I can, not risk losing my confidence in the markets, because, again, I did blow up my account twice. I don't want to have that feeling anymore. And this time I'm actually sticking to plans, which is actually helping me out a lot. As a beginner trader, so definitely I encourage that. Also, I know I don't have a huge audience at this point, but if you guys, future audience, if you have any comments about any advice on beginner trading advice or anything like that, just shoot me a comment down below or hit my Twitter account up. And that's pretty much it that I have for you guys. Thanks for watching, and I'll see you on the next one.